MegaWhale team, welcome back to our channel. Thanks for tuning into today's video. It's great to have everyone here. Before we get started, I want to quickly talk about the giveaway because obviously I haven't done many videos this week. I've been quite sick. So I've decided to postpone that second giveaway until Monday upcoming. So this Monday we'll have the winner of the second giveaway announced. Of course, just to enter, all you need to do is comment anything. It could be a question, it could be a statement down below on any video, and your comment will automatically be entered into the giveaway. Before we get started, guys, head over to the pinned comment down below, join the link to our Telegram channel. You'll get access to all our updates, daily information, news events, a whole range of more things in there. Okay, let's go ahead and dive right into the video. So we're going to be talking a lot about, I guess, the macro today. And I'm not talking about the macro in terms of where the price is going to be heading. We're going to be talking about it more in sense of, what is happening with the economics and how that can actually affect crypto right now. Because we do have a few things that I want to talk about, primarily the bond yields. And the 10-year government bond yields are looking as if they have topped out, for now at least, and they're going to come down again. Now, what does that actually mean? So let's dive right into it. First and foremost, what actually is a bond yield? And this is important. We have to understand what a bond yield is. We have to understand what a bond is. We have to understand how these actually impact the dollar, and therefore how that impacts cryptocurrency. So, bond yield is probably a term that you've heard thrown around a lot lately. You're probably going to be hearing it thrown around again pretty soon, because we heard it a lot coming into this bear market a few months ago. We heard it, quite a bit. We're going to hear it again. So a bond, in essence, I wrote it out over here so you can hear it, so you can read it yourself, is essentially, guys, an IOU. It's like an IOU money. It's issued by an entity when it needs to borrow money. So, for example, I want to borrow money from you. I will write you an IOU. That IOU is essentially the bond. Now, government bonds, on the other hand, are the same thing, but it's when the government borrows money from you. And now bonds generally run into something what we call maturity. So the end of their life cycle, and then the amount owed is paid at the end of maturity in a lump sum, okay? So what is the bond yield? So when you have a bond, you have a set return on your investment, ROI, that is paid out to you at certain intervals, and that is called the yield. That is what the bond yield is. Now there's a negative relationship between bond price and bond yield. We can see diagrammed over here. When the bond price increases, okay, when the bond price increases, we see the bond yield decrease. And when the bond price decreases, we see the bond yield. So bond price decreases going this way, therefore bond yield increases. Okay, so as the bond price increases, we see that yield decrease. So these are pretty important things, guys, because, at a face value, you're thinking, oh, who cares, but it actually does affect the dollar, and it affects the strength of the dollar, and therefore it affects the strength of our financial markets. So let's take a look. Rising yield is bullish for the dollar, and the falling yield is bearish for the dollar. So if we have a falling bond yield, so we have this drop down over here, which is probably going to happen. Looking at the chart, we're looking like we're coming up on some major support over here. We're in this major blockage range over here. There's a resistance support range. If we do break down here, the bond yields will fall, all right? So if bond yields are falling, bond price must increase. If that increases, what happens? It's bearish for the dollar. What happens to the DXY? The DXY decreases, okay? We've already talked about this, guys. What happens when the DXY decreases, guys? Money flows out of cash, the dollar weakens, and into risk assets. Risk assets increase in value. That's it. It is really that simple. So if we see this happen, if bond yields start to fall here, we will see money flow away, the dollar will lose strength, DXY will pull back, money will flow into risk assets, okay? And risk assets should increase, okay? So let's take a look. Where is the DXY right now? The 14-day chart, we're breaking out. We went up to the $109, 110 zone like we said we would, all right? Like we talked about all the way back in 96, all right? We will most likely pull back to 103. That gives Bitcoin, gives cryptocurrency a bit of movement room over here to actually push upwards. All right, let's take a look at Bitcoin. Let's go to that Brave New Coin Liquid Index and take a look. Where is Bitcoin right now? We're in a pretty heavy spot. All right, we are getting rejected or currently testing and actually pushing under now the 200 SMA on the weekly. Now, we've talked a lot about the 200 SMA, and this has been a point of critical attention as long back as this channel started back in November, when we came out and we talked about being actually bearish. We've come down, we've lost it. Obviously, we found support at that 18K level, a level that we all now know officially that is a major, major point of support, all right? No one is doubting that anymore. People were doubting it, no one's doubting it now, okay? We bounced very strong, 25, 26, 27%, pushed up over the 200-day moving average, and we're currently coming back down. Now, the 200-day moving average is sitting at $22,900. We're currently at $22,818, just underneath the 200-day moving average. If we fail to close a weekly candle, above that 200-day moving average, that would constitute a rejection, and that would be bearish for Bitcoin, okay? It would constitute a rejection. It would indicate that area is no longer, acting as that support. It's acting now officially as that resistance is flipped, all right? It's a strong resistance. It's gonna be hard to break that range. We do have to keep in mind that 200-day moving average is not only major resistance, but it is also passing through the major horizontal resistance zone, which we'll discuss now. And sorry guys, my voice is still a little iffy. I'm finding it hard to speak long sentences, so bear with me a little bit. Still coming off the back end of this sickness. So we do have this current resistance zone over here, and this resistance zone acted as a very strong resistance in December 2020, and it was what really triggered that second wave, or that kick started that move upwards. That is when we broke that all-time high from 2017. That was that push upwards, that final bit of resistance before we just shot upwards for Bitcoin and went into this parabolic run. That first wave of that bull market started. We pulled back, altcoin bull market started. We continued upwards. Okay, it was a short-lived bull market, but it was still there. Coming over here, guys, we're back in that range. We're testing that range. I think if we zoom in, we actually are just back in it now. We're just back in that range. So we are pushing through, and 23,800, like we said, is that major, major trigger. And just like all things, guys, on the larger time frame, we need higher time frame closes to actually confirm them. Okay, so when you're looking at something on like a 15-minute chart, you're waiting for like a 5-minute close or a 3-minute close. Fine, all good. But you're looking at something on a daily and a weekly chart. You need those higher time frame closes. In this instance, we are within a macro channel, all right, the descending channel, bullish pattern. Okay. We're looking for that daily close above this horizontal resistance. The reason daily is because we haven't had too many candles in this zone before, okay? Now, 200 is a bit different, okay? We're looking for a weekly close for 200 because we are on the weekly chart. This indicator, the SMA, is now set to the weekly input, and therefore we do need that same input time frame to match that input to constitute the reversal. So a weekly over the weekly 200 moving average is what we need, okay? Let's talk about, I kind of want to bring it back a little bit to the economy, so I've wanted to focus on that in this video. And we've talked a lot about, I guess, this over here. And I want to kind of bring it back to this a little bit now because it's quite relevant and important, because I posted on Telegram, and I'm not going to bring it up, but if you're in the Telegram channel, you would have seen it. I posted a little chart that talked about how companies between May 2020, I think it was the 16th of May or 12th of May, up in 2022, up until now, sold off about 200, off the top of my head, 67,000 Bitcoin collectively, which is 5.5 billion liquidations. Okay, so forced selling due to unable to maintain those positions, or because of interest on debt rising and their debt to service ratio is decreasing too much, so they have to cancel those obligations, fulfill those debt obligations, and sell those assets to increase their cash balance flows. Now, this has happened, okay? We warned you about this for a very long time. We told you this whole thing was going to happen, all right? It has now happened. So it's in the past. It is not going to happen, or is unlikely to continue to be one of the main factors driving the price down. A lot of companies who have been forced into selling, the main chunk of that has already occurred, okay? So we're not going to see a second big wave of companies selling off assets in terms of cryptocurrency and stocks. We may see that happen for residential properties. I know in Australia, companies can own housing assets, so we might see it in different sectors. But for cryptocurrency, the majority of selling has already occurred from companies. The majority of liquidating positions has already occurred from companies. Some of the biggest negative volume we will get has already occurred in this space. Now, people always relate to it. They're not going to accept it, not going to agree it. It's fine. It doesn't matter. I don't care what people think, guys. I know how the economy works. I've been doing this for a long time. I've got backgrounds in finance, economics, accounting. I understand how money flows from balance sheets and cash, and I understand it. I can look at a company's financial and tell you what's happening. So this is what's happened, this is what is happening, and this is what will happen, and we already know what's going on. So if we can link this back, we can link all of this into the fact that bond yields are potentially falling, which will have an impact on the DXY, all right, which will change the dynamic between this over here, okay, which will change the dynamic between this over here. We can have a little bit more of an assumption of what's going to happen to the price. And if we bring it back to the chart that we talked about a few times on this channel, and I don't really like to talk about too much just because, you know, it does go over a few people's heads, because it is a little bit complicated. I'm not going to go into too much already, but we can understand what happens to systematic risk in the economy when we have these elements being altered. And all of these things are in favor of risk assets actually seeing a little bit of a rally. And I'm not saying that this is for sure going to happen, because we still don't have economic data such as the CPI, such as the FOMC minutes meeting coming out at the end of the month. That could still be very, very negative, and we could see a very initial negative reaction in the crypto space. Like I said in the last video, I believe if it is incredibly negative, what we might see is we might see this initial crash, this initial heavy drawdown like we saw in CPI, and then a rally back upwards. But we'll have to wait and see, because we can't really make an assumption based on data we don't have access to. Now, if you told me, you know, the exact number is going to be in a few weeks, I'd be able to tell you exactly what's going to happen. But since I don't know what it's going to be, I can't give you an example. I can't tell you what's going to happen. That's just reality. You don't have the data, you can't make the prediction. It's just going to be a blind assumption. We don't make blind assumptions on this channel, guys. This is all facts, objective. Every analysis I give you, every chart I show you, every prediction and trade signal I give in my VIP, none of it is my personal opinion, okay? I don't have personal opinions. I look at the data. I just follow what the data is suggesting. Sometimes the data is wrong. Sometimes other elements such as market psychology can come in and push prices higher or move prices in sporadic directions, which kind of negates what the technicals are showing. That's what happens. That's the market, okay? So looking at Bitcoin, do I think we've bottomed out? I've talked about this a lot already, guys, and you know, we'll go back to this chart over here. And my simple answer to that is we can't say for sure yet because we don't have a reversal, okay? So we do need that reversal to come in to say for sure. Weekly close over 200, break over 23.8 daily at least, okay? We need that to come in. That is going to be our reversal, okay? Is the bottom likely? Like I've been saying this entire time, yeah, it's very, very likely. Like I haven't changed my tune on that at all. If anything, I'm probably one of the only people out there who hasn't changed their tune this entire time. I hadn't changed my tune this entire time down. I was bearish, and I hadn't changed my tune since we reached that bottom point. I've been bullish to some degree, expecting a bottom potential at that point, and I still do. Okay, now until that loses support, it's still support, and therefore we should act it and treat as its support. I have been accumulating Bitcoin between $18,000 and $20,000 this entire time. I've been a little bit on the weaker hand, meaning I've been selling a little bit at these higher ranges just because I'm preparing myself in case we do not get that reversal and we crash back down. We can always re-enter, you can always buy again. I don't care about missing, you know, 4% of profits because that is an insurance saving yourself, you know, potentially, you know, 20, 30%, okay? So let's take a look at this chart over here. And this is, I guess, is one of the charts that I've got my eyes on the most over here. We've talked a lot about the VPR already, but, you know, we've got the 23.8 level over here, which I can go ahead and point out. The 23.8 on the chart over here is around about this level. We can see at the top of this wick. So that is clearly that trigger, guys. You know, there is no doubt about that. That range high clears over here. We push upwards with that low trading volume range, maybe to push to $27,000, $28,000 next, okay? That is the next logical move for Bitcoin if we do clear that high. Now we do have this uptrending, you know, triangle formation over here. That we do have this major zone of support resistance, which we did flip and actually pushed us upwards. There's a chance we come down and retest that again. Real possibility. Like I said, FOMC coming out soon. I wouldn't be making many rash decisions right now. Be a little bit more conservative in your investing and trading right now. I probably won't be actually trading that much, to be honest, until the end of the month again, just because You know, like we said already, guys, at the start of this month was going to be one of the most volatile and difficult trading months there was going to be this year because of all the back-to-back news events. And as we get closer and closer to the expected bottom, the volatility and chop starts to really ramp up and the direction becomes really unclear. On a short term, on a macro, you know, it's still very obvious to someone like myself, I can see it, but for a short term, it becomes very unclear. We get these, you know, big wicks up and down, up and down, up and down. A lot of scam wicks, a lot of, you know, overlaying market structure. You got wedges and triangles and pennants, and it's just really hard to figure out exactly what's going on. And a lot of people get wrecked in these periods. It's been a rougher month. Like my win rate personally is down to about 68% this month. Usually it's sitting around like high 80s. The last 3 months I've had win rates in 90%. So it does actually affect traders. Now, taking a look at that price action, guys, we can see a push downwards. Again, I wouldn't be too worried about trading a range right now. I definitely want to be looking to get in this period. If we go back to this chart over here, this is very much a chop zone. And, you know, just looking back in past, you know, look at this chop over here, up and down, up and down, up and down. You know, everyone looking to trade that zone would have got caught out, expecting a break upwards, expecting a break downwards, and just kept going up and down, up and down, up and down, over and over. We can expect the same thing over here until we get that directional break, okay? I hope today's video has been helpful, guys. I really wanted to make today's video a little bit more educational. I hope you learned something. I guess that's the most important thing about these videos, guys. If you just come in and try to pick up one thing every single time, learn something, you know, you're gonna learn a lot because I really am just putting out information there, guys, for you for free, essentially, and help you guys understand it. And it's particularly that bond yield stuff today, guys. Focus on it. Don't ignore it. These things are incredibly predictive. They're predictive analytical tools. They can tell you exactly what is happening in the economy on a chart, you know. All of this stuff, like we talked about before over here, I'm just going to find it. You know, this is theoretical. This is like what is happening behind the scenes, but this is the result of what is happening behind the scenes. And the charts speak the picture. They paint the picture. If you can understand how to read the chart, you're understanding everything else that it goes on behind it. You got a pretty good understanding of what's going to happen to the price. So keep your eye on the bond yields, guys. They're very telling. They're going to tell you exactly what's going on. They're very, very beneficial. They don't often actually lie to us. But what they don't tell us is the speed and velocity of these moves. And that's a really important factor, okay? Speed and velocity of rebounds or drops will not be told through this. This will tell you actual strength and direction, very, very different. Speed and velocity, however, we can determine through this chart. And we've talked a lot about this chart, but I don't think I'm going to go any longer than about 20 minutes today. So I don't want to talk about this chart today. But in essence, just a real quick summary, we have systematic risk, all right? We have unsystematic risk, and then we have total risk. This chart over here on the left is a total risk. This chart is systematic risk, okay? The difference between, all right, is the non-systematic risk, okay? When systematic risk increases, the beta of these asset classes increase and the risk increases, okay? Now, there is a difference in variance between each individual asset, and this is where it gets really interesting. You hear people say, let's wait and see how the stock market opens to determine the course of action for Bitcoin. And this is like a mentality that a lot of people think is true, but it's completely false. Because what does the stock market rely on for price movement? Think about it. What is connected both to the stock market and cryptocurrency that drives price? Systematic risk, okay? What determines systematic risk? The economy. What drives the economy? The dollar. So everything comes back to the dollar, okay? It is bound by the dollar. These aren't connected to each other. They're connected to a similar denominator, okay? And that denominator, or what do you want to call it, I don't know if that's the right word, I don't know, drives the price, okay? And then the price action between these two have a different variance, a different correlation, and react differently because their betas and risk-free rates are different, okay? I'm gonna leave it there, guys. I hope you enjoyed this video. I hope it was a little bit educational. Like I said, head on down to the links down below, join our Twitter, join our Telegram. We post a whole range of cool stuff in there, guys. We've actually just updated our VIP channel. We've added 3 new features. We've added market exclusive altcoin videos to VIP. So along with all of our trading signals and exclusive market updates and everything already, we're going to be posting 3 to 4 exclusive altcoin videos in the VIP channel every week, similar to videos like this. We're actually going to be opening a group chat for VIP members. And the biggest one, if you're a lifetime member, you're going to get one-on-one Zoom access with me for consultations. So we can have consultations together. Really important stuff, really awesome stuff, guys. I can't wait to bring it all to the channel. I've been working on the VIP channel for a very long time. We've had some amazing profits in there, changed a lot of people's lives, and I'm just really excited about it. So with that being said, guys, I'll catch you in the next video. Thanks for tuning in. Okay guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.